Now we're ready for our profit and loss statement, also called a P&L, that's its abbreviation, or sometimes you might hear it referred to as an income statement as well. This is where everything comes together. This is what tells the entire financial story about your business. It's very important. So the great thing about this is actually automatically calculated. You don't have to do anything to calculate it, but you do have to understand it. It's very important. Now, it is a standard statement so that everybody that actually looks at it and begins to analyze it, including investors and banks, are going to understand it. They're going to understand the terms that are used in it. Even if you don't understand every piece of it right now, you will, I guarantee you, but they're going to understand it because it's using industry standards and practices, right? So investors are actually going to look at this. They're going to scan your P&L for the following things. First thing they're going to look at is your revenue forecast, is your overall forecast realistic? So you're going to look at your revenue forecast, your staffing, and your expense forecast to say, is this really a realistic business? They're going to want to know, are you being too aggressive on revenue or are you being not aggressive enough on revenue? And they're going to be looking at that. Then they're also going to be asking things like, did you under or overestimate expenses? You know, are you coming in really light and so you're showing a really big profit? In fact, you don't always want to show a really big profit, and we'll talk about that in just a moment. Also, your product cost of development. Is it realistic? Can you really develop your product for what you're putting in here? Or have you overspent and you're spending so much money on your product? They look at it and say, you know, you need to cut back a little bit and make your product focus a little bit more narrow, perhaps. Also, they're saying, are you spending enough on your sales and marketing? You're going to be able to generate all that revenue for what you're looking to spend on sales and marketing. Are you really living in a fantasy land, or is this a realistic forecast? That's the key. That's the thing about looking at your income statement and saying, is this realistic? Let's learn how to read a profit and loss statement. So I'm going to actually walk you through step by step how to actually read and interpret a profit and loss statement. So there are 5 key areas to any good income statement or profit and loss statement. First thing is your revenue and your adjustments. Second category is your cost of goods sold. Third category is your operating expenses. Your fourth category is your operating income and your margin, your operating margin. And then finally, your profit and loss, right? We love the profit and loss. We want to know exactly how much we're making. So the first section is real simple. It's your revenue. And all it does, it pulls together all the different revenue streams that you have from all the different models that you used under the revenue worksheet. So you might have used 2, 3, 4 models to actually calculate your overall revenue. Then what we do is we want to take into account any adjustments. Adjustments are things like spoilage, returns, things that would actually adjust revenue so you can get what's called a net revenue calculation. And that's important because what we do is simply just take our gross revenue minus our adjustments to get our net revenue. Very simple calculation. The next section is your cost of goods sold. Under cost of goods sold, or our COGS section, we're going to look at all the expenses including staffing and all the other expenses we entered in our expense worksheet to deliver my product or service. So all we do is we subtract COGS from our net revenue to get what's called our gross margin. Now, gross margin is probably the most important statistic on an income statement or a profit and loss statement. Gross margin basically says how much money is left over to market, to run my business with G&A costs, and to develop my product after I deliver my product. So all it's saying is how much does it cost to deliver my product and how much money is left over afterwards so that I can fund everything else in my business. So why is gross margin such an important statistic for you to know? Well, basically what it does is it tells you and investors how scalable your business is. So if you have a low gross margin, it actually is going to take a lot of expense in order to deliver that revenue. If it takes a lot of expense to deliver that revenue, then you don't have a lot left over for marketing and sales and other things that actually are growing the business. That's what they're looking for. So if you have a high gross margin business, this basically means that you have a low cost to deliver that revenue, which is great because all that extra money can actually be dropped either to the bottom line in terms of profit, or it can be used to fund product development, sales and marketing, G&A, and other expenses within your business. So a high gross margin business. And you say, Ken, what's a high gross margin business? Well, it really depends on kind of the industry you're in, but I would say that in things like software, technology, other businesses, things like 80, 90% is a high gross margin business. Businesses that are in the 20, 30, 40%, that's a low gross margin business. And average anywhere between 50 to 70%. You need that margin in order to run the business. Keep that in mind. I want you to research the gross margins in your industry. Every industry is different, so it's important that you research and understand how does your industry work, what are the gross margins there, and then where do you fall within those gross margins as well. I also want to make sure that you understand is if your gross margins are too low, your business may not be feasible. You may not have enough money left over to actually do anything with the business. All the money is going into delivering to customers, and there's nothing left over, not only for profit, but not actually to grow the business at all. And that's not going to be an attractive business for you to even get into. Now, I also want you to note that when your business scales, your gross margins actually may look a lot better than when you start because you get things like volume discounts. You have more customers. The more customers you have, the more employees you have, the more efficient, the more specialized you get, the more efficient you get as well. So there's a lot of reasons why as your business scales, in fact, almost every business that I see, as they scale, their gross margins start to go up. So what an investor is going to do is they're going to look at your business more at scale than during the startup phase. So don't get too worried if you're like, I got 20% or negative gross margins or maybe 20% gross margins as I start, but after the first 2 years, my gross margins are 80%. Well, okay, now I've got a really good business. Now keep in mind as well as if you're a true service business, your gross margins should actually be around 50%. That's actually how service businesses work. Product businesses are going to be higher into the 60s, 70s, and 80%. So you also have to look at the type of business that you have in order to figure this out. Operating expenses and operating margins. Operating expenses are all the other expenses in your business that do things like sell and market your product, all your product development costs, and all of your general and administrative costs. So all the other expenses, not the delivery of your product, but everything else. So what this represents is how much you're investing in the company to grow the company, to scale the company. These are all these activities that actually make the company bigger, make the company grow, and these are the things you want to spend your money in. So operating margin is the margin or percentage that you have left over after all expenses are actually taken into account that will ultimately inform what your profit and loss is. Now, there's one thing in between operating margin and profit and loss, and that's taxes. And that's really the difference, operating margin versus your profit and loss. And the last section of your P&L statement is profit and loss. This is what the statement's all about, right? This is the bottom line. This is where all your revenue minus all of your expenses, and this is what you have left over afterwards. The important part about this number is this number actually carries over to what we call your cash flow statement, because this is the amount of money that you either have in the company, the actual that turns into cash, or the money that you're losing in the company as well that's coming away from the business. I really hope you found this video valuable. Now, the best conversations start with you, so make sure that you leave a comment, a question, or maybe a takeaway that you got from watching this video. And you're not only going to help yourself, but other entrepreneurs as well. We're adding new videos all the time, so make sure you subscribe to our channel and get access to all this great content that will help you build your business. Oh yeah, make sure that you also share this video with a friend because they can benefit from it too. Be sure to visit entrepreneurnow.com to subscribe to our newsletter, Launch. Now, you'll get exclusive access to articles, free videos, interviews with world-class entrepreneurs, access to our live events, and insider tips that you can't get anywhere else. Thank you so much for watching. We'll see you next time on Entrepreneur Now TV. If you want help with making your business a huge success, then go to entrepreneurnow.com and learn from successful entrepreneurs that will take you step by step through the process of creating and growing your business. Whether you need help with things like a business or financial plan, your overall business strategy, tactical marketing and sales execution, or obtaining financing, we will be right there every step of the way to help you. Every entrepreneur I know benefits from having someone right there as they launch and grow their business. So we provide one-on-one and group mentoring to all our members. In addition, our members get access to on-demand videos, all our live events, financial planning tools, and a library of worksheets and resources at their fingertips. And the best part of all is you're part of a community of entrepreneurs that learn and inspire each other. So now is the time for you to take action. Go to entrepreneurnow.com and join us today. You can tell that beautifully designed is so important to their target market. There's no GMO, there's no sugar, it's gluten-free, it's this free, that free, everything free. And we actually start to segment down from the industry until we actually get to our core market, which is really where our sweet spot is.